Para nuestra siguiente exposición tenemos a Patricia Krause, que es la economista de Coface para América Latina, y ella nos estará platicando acerca de la economía en la región.
Hi, good morning. Now we're going to focus on the Latin American region and to see the effects of the road economy over our region. Sorry to here speaking English, but I think if I try in Portuguese, it's not going to work very well. But if you want to make questions later, feel free to make in Spanish, then you'll try to answer in Portuguese. The Latin American region and Caribbean are composed by 33 countries, which represent 92% of the region GDP. We have Brazil with 39% of the activity. Then we have Mexico with 22, Argentina with 11, Colombia, Chile, Venezuela, followed by Peru, Ecuador. When we consider the road activity, the region represents only 8.3% of the global GDP. So what we have seen here is that we are a region abundant in commodities, such as energy, mineral, and agro. So it was possible to grow in a high rhythm thanks to the strong demand of China, which has increased prices. Growth was possible even in a context of poor infrastructure. We are rich in resources, natural resources, but our manufacturing industry generally lacks competitiveness and is high exposed to imports. But during this time, it was also possible to improve macro fundamentals. Latin American region used to be associated with external debts in the 1980s or in part of 1990s. Now, public debt's not a big deal for the region. Inflation also improved. We had passed through high inflation in the 1980s too. Now inflation is under control in the majority of the countries. Of course, we have some exceptions like Venezuela, like Argentina, and Brazil in a lower intensity. Brazil now holds an inflation rate of 8.2%. Also, another point that was possible to improve was external international reserves. Also improve the stock of international reserve in the last years. And once again, Venezuela and Argentina are exceptions. But now we have a context of lower commodity prices. China is not going to grow at the same rhythm as before. Coface expects a growth of 7% for this year. We also have an oversupply of some commodities, such as agro. We have record crops of soya, which is very important for Brazil or for Argentina. We have also seen improvements in investment in iron ore or in copper, which has increased production and also impacted on prices. During this time, we also reported free fall in oil prices. This is important also because some of these countries were already reporting decrease on its production, the case of Colombia and the case of Mexico. But we have also the positive effect for net oil importers such as Chile or Peru. But it's really negative for Venezuela, for instance. And finally, the recent strengthening of the US dollar versus other currency, as investors expect the US economy to outperform other ones. We see the currency deteriorating all around the world, and it was not different in Latin America. When we consider the 5 main free-floating currencies in the region, all have deteriorated. The Brazilian real, the Chilean, Colombian, and Mexico pesos, and the Peruvian Nova Soles. In this manner, we have seen a sluggish growth in the region since 2011. Here in 2009, we have seen a drop in GDP, but this was associated with the subprime crisis in the US and its spillover effect. But we have recovered the rhythm in 1 year later. But here it's also important to mention that we can break down the region through Pacific Alliance, the Pacific countries, and the Mercosur countries. Pacific countries are growing at a higher rhythm than the Atlantic countries, the Mercosur countries. This is associated with the deteriorating macro fundamentals in the Mercosur countries, mainly in Venezuela and in Argentina. Venezuela, with the shortage of international reserves and good goods, and the effect of oil prices that has further deteriorated situation there. Argentina with strong crisis, high inflation too. And Brazil, we have a strong confidence crisis there. Of course, situation is not that bad as in these two countries, but growth is, we also expect the economy to contract this year. Mercosur countries, okay, we expect them to grow at a lower rate now with lower commodity prices, but still they are going to drive growth in the region. Yes, they still hold more strong fundamentals. So as already mentioned, the effect of commodity prices is in GDP. It also depends on the open degree of each economy as well as the commodity compositions. Here we see in the first chart that Mexico is the most open economy when considered commodities exports to GDP, but actually they have a different kind of dynamic. They are more associated with manufacturing industry, especially to the US market. Energy represents only around 10% of them export, so it's not that representative. Then we have Chile and Peru. Both of them are more concentrated in mineral resources, copper, yes, but also holds agro. Then we have Colombia, which is similar, more or less a close economy for 14%, but we've seen going to the right direction. They have increased its trade agreements with other regions. Then we have the Atlantic countries, Argentina and Brazil. Argentina more associated with agro-commodities, especially soya, which is not only important for them trade balance, but also for governments that always with eyes open with them agro, with soya production, as it's extremely important for them international reserves to control them shortage of international reserves. And Brazil, which is abundant in commodities, in agro, mineral and energy, but is still a close economy, with 10% only of exports to GDP. So here we have seen that commodity prices has also deteriorated in terms of trade in the region. When we consider the left table, we see that crude oils prices have dropped 46% in 1 year, which impacts mainly Colombia, but in the lower intensity also Mexico. Then we have iron ore, it's very important for Brazil, dropped 44% in 1 year. Then soya for Brazil and for Argentina, 30% in 1 year until March this year. And finally, copper, important for Chile and for Peru. So this will also need to add the effect of the US strengthening the effect on this economy. So when we consider this 5 free-floating currency, we see that Brazil was the mainly impacted currency, but it's also associated with the effect of confidence crisis there. We have all the scandal that Bart already mentioned with the state oil giant Petrobras. This has also a spillover effect over the economy. So this strong depreciation of 42% is extremely associated with this confidence crisis. Then comes Colombia with 31%, is extremely associated there with the oil prices. And we have Mexico with 17%. Part was offset by the strong US demand for export. And Chile and Peru. The negative effect of copper price was partly offset by the positive effect of lower oil prices, as both countries are net oil importers. But so when we have this kind of strong depreciation, someone should gain of this. And in this case, our manufacturing industry. So they should see some benefits from this decrease in price. So but here we consider the industry, the manufacturing industry of these 5 economies, but so far you cannot see some improvement in the manufacturing industry. First, we consider the Chilean economy. We see some improvement since the last quarter of last year, but still lackluster. Then we have Colombia. The manufacturing industry is a sensitive arm of the economy, still with low performance. In Brazil, industry contracted 2.8% last year and has decreased by 4.5% in the last 12 months until February this year. In Mexico, as I mentioned, they have a different kind of dynamic. They gain a lot of productivity since 1994 with the NAFTA agreement. So the manufacturing industry is a positive arm of the economy. And finally, Peru, with a sensitive manufacturing industry, also in line with the weak performance observed in the economy last year. So why we have this still sensitive industry if we have seen a strong deterioration in exchange rate? First, we need to consider that usually it takes a lag between the deteriorating movement and improvement in manufacturing industry. Also, sometimes entrepreneurs expect it to be something that does not last long, so they don't increase their production, they don't invest more. Also, they can expect it to have a further deterioration. So when they export, they may keep them inventory to wait for a more deteriorated exchange rate to export. So we have this movement. But one important point here is that we have strong hindrances in the region. One of them is infrastructure. So when we look to this first chart here, we see the World Economic Forum infrastructure ranking for 2 different years. One in 2006, which are the green lines, with 125 countries, and then 7 years later, with 144 countries, or 19 more. First, the best positioned country in Latin America is Chile, with no surprise. Then we have Mexico, which became above average infrastructure, in terms of infrastructure in the last survey, but still it's not something to be celebrated. At position 65 is still very low. Then it's also important to mention that Peru was the only one which improved in the last years, went from 89 to 91, but still a weak position. This is really in line with the low investment rates in the region. When we see the second chart, we observe that Peru was the one which observed the best improvement in terms of investment rates in the region, holds the highest rate when we consider the main economies, then followed by Colombia, then Mexico and Chile, which observed a decline since 2012, and then the Atlantic countries with Argentina and Brazil. So, but when we consider our external accounts, up to now we have controlled current account deficit, but where it should increase in some countries. This is basically the example of Colombia, which has reported a current account deficit of 5.2% last year, after 3.7% 1 year before. This is extremely associated with the effect of oil prices. Yes, we've seen, for instance, in Mexico, we saw a little improvement last year, thanks to the U.S. exports. In Brazil, we have reported deterioration from 3.4 to 3.9. Chile and Peru also improved. In Chile, they hold a very comfortable position. They have only 1.2% of current account deficit that is easily and comfortable covered by foreign direct investment. But in the end of the day, what we expect for the near future, that this world should improve, also because the U.S. Federal Reserve, the central bank, should start to increase interest rate there in September this year. So we should see some inflows of money, some outflows of money from Latin America as well as other regions to the U.S. economy. Now here we present our Coface GDP forecast for the region. So for Argentina should continue contracting this year. We do not expect big improvements for Argentina, also because they will hold presidential elections in October this year, so they should not make big changes. They will let this for the next government. Brazil, strong confidence crisis, all the effects of the corruption scandal. We have been also facing an ongoing fiscal adjustment as our inflation is very high and public debt was increasing. So this year, Coface expects Brazilian economy to contract by 0.5%. Chile has reported a strong decline in its growth last years. We should report some improvement this year. Then we have Colombia. this decline associated with the oil prices, but also if a sensitive manufacturing industry and then construction segment that also should lose dynamic. Then we have Equator. Equator is also strongly associated with oil prices. Growth there was driven by by public expenses in investment and consumption. Now they will have less revenues coming from oil, so that's why we expect a lower growth rate there. We expect 1.5%. Mexico should improve. Growth should improve there, mainly associated with US exports and also some effects of the landmark energy reform. Okay, of course, with lower oil prices, this reduces the attractiveness of this oil reform, but government should shift its attention to shallow water fields. So we think that we could start to see some improvements, some signals in the last quarter of this year. And Peru, strong decline last year in the growth rhythm. We expect some recovery this year thanks to counter-cyclical fiscal measures as well as consumption. It's also important to emphasize that our GDP growth forecasts are reviewed on a quarterly basis. So when we look for the first figures of the Peruvian economy for this year, we see that economy remain lackluster. So we might review this figure downwards in our next forecast. Yes, and finally Venezuela, that we expect to contract by 7%, strongly associated with oil prices there, the effect of oil prices. So, as Bart already mentioned, we have our country risk assessment and business climate. So here in Latin America, we don't have A1 country, and let's just remember is the best grade. We have Chile with A2, which is an A2. Brazil used to be an A3 until 2013, but was downgraded due to deteriorating figures. Actually, we put Brazil in our watch list in our last revision due to the further deterioration of the figures. So it's in a watch list. We've decided to downgrade Brazil. Brazil would become a non-investment grade country. This is something really serious. So we need to continue following what's going on there, the fiscal adjustment that they are trying to do, but they need approval from Congress. Not something easy to make, but needs to follow. Then with the other Pacific Alliance countries, taking out Chile, they are A4 countries. Then we have Uruguay, Argentina. No, Uruguay is also an A4. We have Argentina, Bolivia, and Paraguay as C. And it's also important to mention that Ecuador we also put in our watch list due to the reason that I mentioned, associated with oil prices, and also because they have a dollarized economy there. So it's not possible to make adjustments in the economy through exchange rates. So that's why we also put Ecuador in our watch list. And finally, Venezuela, which clearly ND for us, which means an off-cover country. Finally, presenting our sectoral assessment, Coface holds its sector barometer. This is based on our payment experience and is obtained through a weighted average of the region GDP. So basically, in the last 6 months, we have seen a deteriorating scenario in terms of risk in the region, increasing loss ratio, increasing risk. Basically, they are at high risk there. We see only 2 sectors that we maintain at a lower risk. One of them is retail, which is a medium risk segment that is extremely associated with the strong improvement in GDP per capita in the region in the last decade, and also with an increasing in the credit supply. Of course, they are increasing the lower rhythm, generally speaking, but still performing better than other sectors. And the pharmaceutical is considered a moderate risk, first because population here is aging, so they are consuming more medicine, and also because they have a low elasticity. People do not stop consuming them medicines because they expect economy to perform, to deteriorate. If you need to consume medicine, you will continue to consume, and that's why we see them in a moderate risk. But it's important also to emphasize the two sectors we have downgraded them risk. One is agro because of weather conditions. We have drought, we have floods in provinces in Brazil, Chile, also impacted by this deteriorating scenario in exchange rate, the deterioration in exchange rate. Many of these countries, they depend on imported raw materials, so of course, if exchange rates depreciated 40% in 6 months, them cost margins, them profitability will reduce. They were extremely impacted. And the automobile industry is important to emphasize that's not equal to all countries. First, because we only hold factories in 3 countries, Brazil, Argentina, and Mexico. So in these 3 countries, we have Brazil, which decreased 15% last year, decreased further 16% the 3 first months of the year. People are already very leveraged. Economy is contracting, unemployment's going up, and also interest rates, so people are not attractive to consume durable goods. This will continue with a weak performance. In Argentina, also is an effect of the contraction scenario. But in Mexico, we hold a different kind of dynamic. They are going well. The automobile industry there is extremely associated with U.S. exports. The automobile industry goes to the U.S. market, so they are going well. But when we consider the other countries that do not hold factories in the region, they are also facing some difficulties due to the impact of deteriorating exchange rates. So if they import auto part or automobile industry. So generally, you see some increase in the risk in the region. It's negative, but it's important for people who hold insurance that you are insured by the insurance company. Yes. So that's all. I would like to thank you for the attention, and sorry for the Portugal, the English version. Thank you.